Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. And we are into the new week, 25th to 25th of December. It is the third week of December. And I am giving this webinar on 21st of December between 5 and 5:30 GMT, giving the session-wise forecast for this week, Monday to Friday, and also give you how exactly the market reading is being done using the initial lows and the highs, and explain about the trading strategy we use in order to limit the risk and maximize the profit. So my contact details are given here. Email ID dr@i-knowindices.com, and my Skype chat ID is iknowindices@hotmail.com, and my website address is www.i-knowindices.com. So we have the threefold approach to that of the market. So we follow the derived forecast and the levels in which the currencies are expected to swing during this particular week. Then fine-tune the forecast using the market reading on a daily basis, noting down the initial lows and the highs around 3:30 GMT, and try to find out how exactly the market is behaving, either going above that of the initial high or going below that of the initial low. And then accordingly, we try to take trading decisions. And we buy low and sell high. And that is the strategy we use normally. And in the event, if they breach the initial high and stay above there for more than 30 minutes, then we try to buy above that of the initial high. So we don't go in for the breakout trade. We like to see whether they stay above that of the initial high for more than 30 minutes in order to do a buy and sell trade after the rise. And similarly, we try to do the sell and buy trade once they breach the initial low and stay below there for more than 30 minutes. Then we try to take sell position. And this is what we try to do the market reading. And in the event if the market suddenly reverses, because our quick decision-making ability is very slow when compared to that of the market reactions. So in order to limit the risk, we use the hedge order in the last making position. As soon as the position is taken, we try to keep the hedge order 30 pips away and try to limit the risk. And once the position start making profit, we keep stop at entry and remove the hedge order. So the purpose of using the hedge order is limited that way. And in the event, if the hedge is hit, then we watch for 30 minutes. And if the hedge is not making profit, we understand that the hedge was filled during that of the stop, and then we try to close the hedge with a minimal loss and keep another hedge order. That way, we limit the risk to only about 2-3 pips or 5 pips maximum. Then afterwards, we continue to trail the hedge order to the of the stop at entry stage, and then we try to use a trailing stop in profit making position and also a trailing limit order in order to maximize the profit. When the market moves in our favor, the trailing stop will also move closer to that of the market, and also the trailing take profit order will also trail away. As a result, we will be able to maximize the profit. So that way, we try to limit the risk and maximize the profit. And that is the basic trading strategy we use in order to consistently earn money from that other market. So we are not worried if the market goes against us, even though we try to estimate by using various methods, still the market can go against us. Then hence, in any of the analysis, you find the analyst try to give you the stop level. But my contention is we can estimate the stop level and try to keep the stop. But the players are here to hit the stops. In the event, if they continue to hit the stop, we will be demoralized. So in such a situation, we may have to limit the risk by keeping 30 pips hedge order. And that is the reason that we use the hedge order. And this is possible only with regard to the European, Asian, and the Australian trading platforms. In the case of US trading platform, the hedging facility is not available. And Canadian platform, the hedging facility is available. So if you ask the broker that I need the hedging facility, they will give it. Otherwise, they will deprive that opportunity. And in US, when the hedging facility is not available, you have to be a smart trader. You cannot afford to just like that take the position near the low and keep the hedge order. Instead, you have to wait for the quick moves happening in the market. Once they drop very quickly closer to that of the low, and if they breach the low and see for 30 minutes whether it is a stop and or whether it is an extended move, and once the new low is not breached for more than 30 minutes to 2 hours, if you try to take a buy position, then that will make definite profit. That way you have to become more smarter with regard to the trading decisions, so that you can or avoid keeping the hedge order. But still, you can keep straight away the stop at entry once the position makes profit. That way, you can avoid the surprises in the market, because sometimes what happens, they quickly gain and come back and again hit the stops. In the event, if they try to come down and show you loss, you might become panic. So instead, you can keep stop at entry. If they hit the stop, doesn't matter when they don't breach the new low and then start reversing. Again, you can take a buy position, thereby you will be able to book profit. Now, last week, after that of the FOMC, they quickly gained the level and then reversed the market. And many people would have thought that that is the end of the other majors gaining the levels, and it is going to be the US dollar trend during that of the year end time. And this is the normal tendency the players create. When Euro and GBP were gaining during that of last week, in the early part of the last week, everybody turned bullish and they recommended to buy Euro around 1.0, 1.10 and 1.09, etc. So the players have just made the drop in order to hit their stops. Once the market, all traders turned long, the players don't gain the levels and they are not philanthropic to give profit to the other traders. Instead, they quickly reverse the market and induce all the long holders to liquidate. And many people were thinking that US dollar is going to continuously rally during this particular process, during this event. But what they have done, they made a nominal drop of about 150 pips in the case of Euro. And in order to create the market sentiment, they just created, they dropped about 250 pips in the case of GBP. So normally, you know that GBP is the currency, they use it in order to create the market sentiment. So when it has come to that of the new low 1.48 area, immediately all turned bearish and started taking sell position, liquidated the long positions, but without understanding that they also dropped USD at that time. So when USD is making the drop, that shows that it is a USD weakening move. So they have given a separate attribute as far as USD is concerned and made the drop from 123 to 121 and below 121 also. And this is mainly they have done it in order to drop the yen crosses, yen and yen crosses. So you would have noticed that they made the massive moves in the case of the commodity pairs as a sequential trend reversal for the entire year. So yearly trend reversal starts from that of the first week of December, ends by end of January. So during that time, they will do the sequential trend reversal. In that process, they will start with that of the commodity crosses, then the commodity pairs, then yen and yen crosses, and then they will come to that of the majors, making the big trend reversal move, and finally the European crosses. So that is how the sequential trend reversal happen in the market. So last week what they had done, they made the massive move in the case of the commodities, the commodity pairs, namely USD CAD and Australian dollar. In the case of USD CAD, from 1.37 straight, they gained up to 1.40 as an extended stop and move. Thereby, those who had taken the sell position, they could not withstand to see the loss, and they would have just closed all their positions at 1.40, the psychological level, because earlier all-time low is 1.41. So when it has come closer to that, people would have thought that USD CAD might weaken further, but actually the players just made the extended gain in the case of USD CAD in order to hit the stops. And this week they will just consolidate around 1.38 to 1.40 area and start breaching the levels at the lower side. And also in the case of Australian dollar, they are done earlier going below that of 0.70, etc. And now they are just making a nominal drop in tandem with that of the gain in the case of USD CAD, because they are handling the commodity crosses. So they just made a nominal drop in the case of Australian dollar below that of 0.71, started gaining quickly the levels. Only on weekend they will make such extreme moves. And if you think that they will again make such extreme moves during the other week beginning, the people will not liquidate or take sell positions. Instead, they will try to take a buy position. So what the players do is they slowly gain the level, and once all traders turn long and take buy positions after the gain, then they make that drop. But now predominant of the traders are having a bearish feel, and they could take sell positions during the initial rise. Last time also, when euro was gaining the level to 1.09, then many people have taken the sell positions, and suddenly the analysts started telling that it could go to 1.13, 1.14, etc. And then during the quick rise to 1.1060, predominant of the short sellers have done the short covering and turned long, found that euro started making the drop again. So this is the way they try to trap the traders. In the sequential trend reversal, they just handle the commodity crosses. Afterwards, the N crosses also. When euro and GBP are dropping, they also dropped USD yen. So now again, you can see that in euro, GBP as well as USD yen, they are showing positive net change. So after, and also in the case of commodity pairs, they are showing the negative net change. So that shows that they are handling the crosses of the commodity pairs and also the yen crosses. And later on, they will, from that of the midweek, they will come to that of the majors, euro and GBP, and start gaining the levels. And also at that time, gain the levels in the case of USDN and USD CHF, and drop the level in the case of USD CAD, and rise Australian dollar. That sort of moves they are expected to do it. And this is the expected market moves for this particular week. So swing and firm up during that of the Japanese session today, and then swing and rise during that of the European session. And US session, there will be some slide in order to induce the traders to feel that the market is going to be bearish again. Then afterwards, they are expected to make a small dip during the start of the Japanese session, start rising during that of tomorrow, Japanese and the European session, and also during that of the US session. And the rest of the days we will find during the Japanese session nominal slide, and then rise during that of the European and US session. That sort of moves they are expected to do. And 25th, it might be a holiday in platforms. But what normally they do is during that of the Asian session and during the Japanese session, they make some moves on 25th. And afterwards, sometime we have seen about 5-6 years back that they continue to gain the levels during that of Christmas. But this time I do not know whether they will continue to do it. It all depends upon the platform and also the pending positions of the traders. If the traders have got the pending positions and they are not kept the stops or the hedge order, Then they continue to gain and attract margin call during that of the holiday, and many of the platform they would have declared holiday, and the traders will become helpless. So be careful during this particular time, during that of the Christmas time and also the New Year. Don't keep open positions, and sometimes they may create all sort of losses to that of the traders when the traders are not in a position to log in. So it is the last month of the year, the yearly trend reversal is expected to happen during this particular time frame. So keep in mind that you can only do swing trade during the trend reversal time. We have seen the monthly trend reversal, and the yearly trend reversals will be very big moves. That is what you come across. So there is no question of bearish and bullishness involved in the market, and they will make either way extended stop and try to earn as much as possible. And still they will continue to do the sequential trend reversal, but they will do it for 2 months, not 2 weeks or 1 week. During that of the monthly trend reversal, they make it, and that will be nominal moves. But the yearly trend reversals will be big moves. But when compared to that of the previous years, this year they are making a very nominal volatile moves. In fact, it shows that the volume is relatively reduced in the market. Now coming to that of the expected range in which the currencies are expected to swing. So euro could swing from that of 1.0825 to 1.1225, and we could suddenly see that it breaches 1.1060 of last week high, start gaining the levels to give a lot of surprise. And also from that of 1.4875 level, GBP is expected to gain quickly to 1.53 in order to change the market sentiment from bearish to bullish, so that the traders will go in for short covering. And in the case of yen, it will be range bound move from 121 to 123, and USD CHF is expected to make less drop and more gain moves in the market, and it will be more of a sideways and slow gains, and along with that of USD yen. But Canadian dollar, which is also a denominator currency, they are expected to make the higher level consolidation today and slowly start making the slide. And then you'll come across that it is not wise to take buy after the rise. And in the case of Australian dollar, they are expected to slowly gain the level up to that of 0.7250. Afterwards, quick gains could be seen in the case of Australian dollar. So now we'll come to that of the market reading. I noted down the initial lows and the highs which are set around 3:30 GMT today, and see what happens to the market. So euro initial low is 1.0850, which is not breached, and the high is also 1.0883, which is also not breached. And in the case of GBP, 1.4892 is the low and 1.484921 is the high. They are not breached the low or the high. And in the case of yen, 121.04 is the low, 121.38 is the high, but they breached the high because it is being Japanese session or the Asian session. They are active in the case of yen, and they breached the high 121.38 and gone about to 121.49, and mainly they will gain nominally the levels in the case of yen and yen crosses, and again they will make a drop in the case of yen after going to 122 in order to induce the long holders to liquidate, and then they will go to 123. Then in the case of CHF, 99.09 is the low and 99.32 is the high. They are not breached the low or the high. Only in the case of USD yen, they breached the high. And in the case of Canadian dollar, they breached the low 39.28, 1.3928 is the initial low, and 1.3923 is the current low. They just made a brief downward stop for about 5 pips, and then they started gaining the level above that of the initial low. They will try to make either way stop-ins and induce the traders to take a buy near the low and book profit near the high, and suddenly make a big drop to trap the long holders. This is how they induce the traders from bullish to bearish to bullish condition. So every drop they will try to take a buy, and for the small drop they will try to average it, and later on they will continue to drop. And this is what they have done it in the case of Euro and GBP, and now they will do it in the case of the USD CAD, the denominator currency. And USD yen and USD CHF, they are expected to gain the levels. Australian dollar 0.7155 is the low, 0.7178 is the high. They are not breached the low or the high. They are making swings. So only in the case of USD yen and USD CAD, USD yen they just breached the high, USD CAD they breached the low, which is a contrarian move, because USD yen when it breaches the high, it is a USD gaining move, whereas in the case of USD CAD when they breach the low, it is a USD weakening move. So this is how they make the contrarian moves to handle the crosses and also make swings to induce the traders to commit the positions, and later on they try to trap the traders. So with regard to the trade recommendations, I'm recommending only the buy trade. So buy near that of the low 1.0852 they are expected to make during that of the swing, because when they are not breached the low or the high, what they do is normally they come either closer to that of the low and reverse, come closer to the low as a false move, and then reverse quickly and breach the high and go above. So I am just keeping about 1-2 pips above that of the initial low a buy limit order. If they fill it, fine. Otherwise, I will just wait for the quick drop to happen during the start of the session, and once they stop cutting the new low for 30 minutes from the start of the session, then I'll try to take a buy near that of the low for this session, and then I'll be able to book profit during that of the rise, and also keep the hedge order 30 pips below to limit the risk. And once the position makes profit, keep stop at entry and remove the hedge order, and you can trail the take profit order on the upside when they are rising after keeping stop at entry, and then slowly trail the stop also 15 pips away from that other market, so that if they drop, the trailing stop will be filled. If they gain, our take profit order will be filled. So as a result, we'll be able to maximize the profit. Now these are all the session timings. So until March, we'll be having these session timings. So early and the late sessions, they handle the majors, and the mid sessions, they handle the crosses. So accordingly, you watch and trade, and also you commit positions. Once they make 40 pips spread between the high and the low, then you try to commit position until such time they will widen the spread. So once they make a downward stop or an upward stop, if we commit position and keep the hedge order, we'll be able to quickly book profit, especially the US traders. Now, I've got other commitments during that of the next week, so I'll not be able to do the webinar on coming Friday, and also the next Monday and Friday. So I'll come back on 4th of January and give the webinar for the new week. And according to my analysis, Euro and GBP are expected to make an upward stop or upward extended gaining move for that of the year and time. So don't become bearish when they make such moves on the downside. They are all buy opportunities. That is why I given the levels. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and also you people for your kind presence. I wish you all very happy Christmas and very happy New Year. Wish you all profitable trades. Let me answer to the questions which are asked here. Hasan has got a question. How do you see silver? It is holding the same level for the whole. Yeah, silver, they are making a low level consolidation in order to gain the level, because the volume is relatively low, so they have to hold low for a longer time. especially in the case of commodities, the traders are very limited. That is why they hold it for a longer time near the low. And also, uh, they have, it is not sufficient if they just get the volume in the spot market. They want the volume in the futures market, especially futures, 1 month future, 2 months future, etc. They want the traders to commit positions, and then they try to make the whip some moves and hit all the stops. So commodity trading is not like Forex trading. Do you see euro going back to 1.145? Yes, euro is expected to gain the level, and especially the last week of December, you will come across a price rise happening in the market, 28th to 31st. And afterwards, during that of the early part of January, the market could use all rumors to gain big the levels. So what is visible in the market is not true, especially during the yearly trend reversal time. Then Ramesh, will there be a big reduction in the trading range during the holiday? Yeah, trading zone might be the same, but what they do is, as I explained earlier, that when the volume is very big, they can make small swings because the traders might commit both sell and buy positions. So in such a situation, what happens? They try to hit the stops on the sell side as well as on the buy side. So that way, they may make a small swing. And sometimes if the traders have committed one-sided, say predominant of the traders have taken sell positions, then what happens? They make one extended move on the upside for about 150, 200 pips, so that those who have taken the sell positions, even though they don't have the stop, they will try to forcibly close after the rise. So that is how they make the moves in the market. So holiday doesn't mean that they have to make a small swing. They can make very big volatile moves. And in the case of N crosses, you find volume is relatively less when compared to that of the majors. But N crosses, they make about 200 to 300 pips swing. So don't relate it to that of the holiday and the small range. Always keep in mind, if they want, they can make big swings during that of the holiday also, even though less volume is there. And also when they quickly drop and gain the levels during the holiday, and as soon as the holiday is over and the people come for trading, they will commit lower level sell positions. Then it is easy for them to slowly gain the market as an unassuming gain, telling some stories, and later on they will simply say that market has reversed. After the gain, everybody will say that, okay, the market is bullish, and try to take buy and sell trade. But during the drop, predominant of the analysts will be recommending sell and buy trade, or cautiously wait for the market to settle. Thanks for the wishes. And Munal, continuous insight. Happy holidays. Thank you, Munal. And what is the outlook for New Zealand dollar? New Zealand dollar has made lesser drop when compared to Australian dollar and is expected to gain more levels during this year-end time. Then Ramesh. Okay, have a good festive season. Thank you. Thank you for all your wishes. So no more questions. So even though it is a holiday time, you can enjoy the holiday, but if you commit positions, use the edge order to limit the risk, and don't forget about our trading strategy. Always we have to be very careful in limiting the risk and maximizing the profit. So I'll show again the forecast page for those who have come late for their benefits. And so the market is expected to gain the levels. Last week, what they had done, the drop after that of the FOMC. Initially, they made the gain quickly and then reverse. That was an upward stop, and then they just dropped. And now you find on Friday, they started gaining the levels. once the predominant of the traders have liquidated the long and turned short, they gained the level straight away during the US session on Friday. And so they are expected to make either way stop and that way and suddenly make one-sided upward moves in an unassuming way during that of the year end and the new year time frame. So if you refer to that of the charts of the earlier years or those who have been watching the market during the year end time might be knowing that they suddenly become very aggressive. So keep that in mind and make an objective trading and don't keep open positions for a longer time. So wish you all happy trading and see you on the new year and hope the new year brings you all prosperities in life. Thank you one and all. See you.